Rather than a recent addition, there's a stock that we initiated 2 or 3 years ago, but we've been adding to in quite a material way. And that's Vista Group. I'm not sure if you're familiar with Vista. So Vista is a provider of software services to the cinema industry globally. So again, to the points that I was making earlier, this is a piece of software that is mission critical. The company, the cinema, cannot operate without it. It's a POS, so it does all the ticketing, it does all the scheduling, it does all the customer feedback engagement. They have 40% global market share. And if you strip out China, it's closer to 50%, although they are now participating in China as well. So when you think from a quality perspective, now this is a business that mission critical software, strong recurring earnings, absolute leader in the industry, and the other player which is in the industry has actually pulled out capital and saying they're not going to invest any further. So they are the leader and will continue to be. And I'll go through the financial side in a sec, but really that's the cinema part. There's a part of this business which is called Movio. And this is where we feel the market is underappreciating or doesn't really get what they're trying to do here. And Movio is a data analytics company. So essentially they're aggregating moviegoers' data, so any point of contact, anonymously of course, and that gets stored into a central database. So when Vista Cinema has almost 50% global market share, you can imagine the depth and the value of this data. So what Movio and Movio Media is doing is going to the actual film studios, and they have signed contracts with the major film studios that they can tap into this data, and what that helps them know is pre-production assessment of customer behaviour, but also with their digital advertising.
So
and we know
customising the films that they're producing and making based on investor tastes using this data?
Using it. And again, that's at very early stage, but again, when you think about the size of the digital advertising market, it could be huge. And it's a very small part of the business, but we feel that it could actually be as large as the core of the business, which is the cinema software.
And the valuation?
Correct. So coming back to that, so this company, it's operating, so its margins are in excess of 30%, have consistently been so. It's got an ROE in mid-teens, but actually expanding because the Movio part there's a huge amount of operating leverage there. And then it's been profitable, which not many of these tech stocks have, for 10 years. And the other piece of it pays a dividend. Very small one, but it pays a dividend and has consistently done that. So when you look at it on EV to sales, and it's trading on 4.5 times EV to sales, on a 12-month forward PE of 34 times, 35 times, to us that reflects, given what we know and where there's that latent upside that isn't being factored in, we still think it represents value.